Now, very important. I love watching other YouTubers. I love watching other channels. Last night, there was a couple questions that were asked. I want to just kind of clarify any kind of maybe confusion. One is, who are the market makers? That's a great question. The market makers are large institutions. These are the people with money, a lot of money. Because you always hear, oh, the market makers this, the market makers are doing this. Who are they? They're people with a lot of money. These are the people who back the exchange. Now, what do I mean by that? Well, let's just draw it out. So what we have is we have the exchange right here. This is the exchange. I don't know why I'm drawing like a shed, but this is the exchange. Now you have the money makers or the market makers. So this is the money. Whenever you buy something, you have to buy it from someone. And what ends up happening is, this is you. You want to buy a coin. The market makers sell you that coin. So your entry price is right here. And you are wanting to buy because you want it to go up. You're longing the coin. You're doing a spot trade. You want the coin to go up. Then you want to buy again here because, well, it, broke your level. It broke, support. It's finding support rather. And you buy here. So what the market maker does is he sells, because you can only buy from someone who's selling. You can only sell to someone who's buying. So here, the market maker sold you this so you could buy it at a higher price. Now you have a whole bunch of other people that are buying the same thing. And they're like, man, this is great. It's going to $1 million or $1 if you're doing Doge or whatever you're doing. And they start buying. So you have a whole bunch of people over here. These represent a whole bunch of people. And what they're doing is they're buying and buying and buying and making the price go higher and higher. And all the time, the market makers are selling to them. Now, how can the market maker make money? Because right now they're not making any money. The market makers, and another word that's often used is called liquidity. Liquidity, in my opinion, has several different terms and meanings. And it's very difficult for someone just to give a one answer on liquidity. You'll hear, well, the coin needs liquidity. What does that mean? And for me, in my opinion, it makes it much easier for somebody coming in brand new to understand what liquidity means if you give the definition rather than using the same word for your definition. For example, the coin needs liquidity in order to move. Okay, well, what's liquidity? Liquidity is the amount of buyers and sellers. Okay, then in addition to that, if there's not enough liquidity from the market makers, then the coin won't do well. So what does that mean? Well, the market makers have to be willing to sell at that price. Now, of course, are there other people that, are selling? Yes, of course. But that's a very small portion of what's actually happening. If you go to the order book and you see that somebody is selling at 20 cents, they're selling 2 of them. Somebody else is selling 2 at 40 cents. Somebody else is selling 2 at 8 cents or 80 cents. And you want to buy 8 of them. Well, you can buy 2, 2, 2, 2, 2. And the last one is $2.25. You literally moved up that coin because there was low liquidity. Once again, the amount of people selling. Now, if the people are only selling a very small amount of it, due to the amount that you want to buy 10 of them, you have to buy 2 from here, 2 from here, 2 from here, 2 from here, to where you get your total 10 that you're wanting, but you're also moving up the price. So this is what it said when, or mentioned when, due to the low liquidity, you will move the price. That's what that means. So once again, liquidity means a few different meanings, and hopefully I explained that in the best way possible, in a very simple and easy way to understand it. If you thought that that was a clear explanation, then of course put a 1 in the chat. If it was confusing, put a 2 in the chat. And if it was confusing, let me know why, so I can better explain it. Now going back to this, since the price is going up, and this represents this. Hey, look, Retro Mike, man, you are a beast, man. Retro Mike with a gifted membership, probably one of the biggest supporters of the channel. I greatly appreciate you, man. You're the best and my favorite, along with everybody else. Now this represents this right here. Now, when this happens, we mentioned that there's liquidity here. Once again, the famous word liquidity. What is liquidity? We've already given a few different definitions of liquidity. Liquidity means also that the market makers have a bunch of orders that they were sell orders that you bought. So they have a whole bunch of sell orders that the retail bought, resulting in the price going up. So here we have a 2, here we have just a simple representation. Here we have 2, we have 2, we have 4, and then we have a bunch. The market makers, when the price moves drastically up, so here, went up, came down, took away some of the liquidity, came up, came down, take up some of the liquidity. Once again, liquidity is the amount of sell orders that the market makers had to do in order for the retail to buy. In order for the market makers to make money, well, they need the price to come back down here. Whether these are stop losses or liquidation areas. So with the market makers, the people with money, and these guys, they're in it to make money. They never lose money. What ends up happening is they will purposely move down the coin and move down the coin. And now they're making money here. Now they can only sell to people who are buying. So now people, they see that it broke a level, it's lost it lost its support, a trend line. The market makers will print head and shoulders, inverse cup and handle, bear pennant, bear flag. They will print these patterns because they understand that there are a lot of pattern traders, and they'll see those bearish patterns tricking the retail to sell now, or rather to short. So when the retail is shorting, they are actually buying longs from the market makers. So now all these are longs. All these were shorts that the market makers were selling to the buyers, which that's why the price went up. Now the market makers are collecting their money. They're bringing the price down and they're collecting on all these orders they did. Now, does that mean that the market makers will come all the way down and take all of this and this and this? No, because they are now producing liquidity or ways that they can make money up top. So they can come down, and this is why it's very important. When you're doing the fib retracement, the 0.382, which is 38%, is on average the place where the amount that the price action will retrace to. 0.5618, that's 50% or 61%. That is referred to as the golden pocket. And in my opinion, it's going to be pretty rare that we're going to see that in the bull run, full-fledged bull run, because it's going to be very, very bullish. We'll be lucky to see 38% retracement, or the 0.382. Very lucky. Right now, that's what we're seeing a whole bunch of. So hopefully this clears up any confusion when it comes to liquidation, the several different meanings of liquidation, and who are the market makers. If you found value in this video, definitely smash the like, subscribe to the channel, have the notification bell on, follow me on Twitter, because on there I give you updates on when we go live, whether it's going to be 12 p.m. Eastern Standard Time, 3 p.m., 5 p.m., 7 p.m. Just make sure to follow me, and I do thank you so much. We'll see you in the next video. As always, let's make this money.